guys, welcome back. In our previous video, we were discussing chapter 3, which talks about input tax credit and computation of GST liability. And we also covered section 16, 17 and 18 in detail. So in our previous video, we have discussed section 18 and also we have solved some problems. So now coming to the sections, whatever we are supposed to cover in this chapter, we have done with section 16, 17, 18 guys. Clear? So come to the notebook, the first page of your notebook where you have written the section numbers. Come to that page. So there I think you are done till 17. So now write 18 under CGST. Under CGST, input tax provision is same for both intra and interstate supply guys. So there you write section 18 and in content, availability of credit in special circumstances. Availability of credit in special circumstances. Clear? Okay. Next. So there are various special circumstances there. Totally 6 subsections are there under section 18. We have covered it. In our previous video, we have covered this. Next, coming to section 19. Write section 19. Write section 19. In content, taking input tax credit or ITC, taking input tax credit in respect of inputs and capital goods sent for job work. Sent for job work. Yeah, I repeat, taking input tax credit. Input tax credit, you can use short form ITC. See, in the exams, don't use short form. To the extent possible, please don't use short forms. Even for and, don't write the short forms, guys. Clear? But you can use short forms only. Some specific short forms like ITC, you can use it. Or else, if possible, for that also, you write it in full input tax credit. Because see, when you are using short forms, it depends on the mood of the evaluator, how he takes it. So I suggest you, to the extent possible, please don't use any short forms, guys. Clear? If by chance, if you're running short of time or if you're lazy to write full forms, some short forms you can use like financial year. So instead of writing full financial year, you can write FY, or instead of input tax credit, you can use ITCs. These are the only few shortcuts which you can use. Please don't use any other shortcuts. Sir, I have developed some shortcuts for something else, for any other words. Can I write it? Please don't use it, guys. Please. Okay. So I think you can aramse manage the time in the exam, provided you practice well and all when you're in your preparations. So please write everything to the extent possible. Even input tax financial year also, try to write it in full form only. If not possible, then you can use short form for this ITC and financial year, but not for others. Clear? Okay. Then write section 20. Then you write 20. Manner of distribution of credit by input service distributor. Input service distributor. Manner of distribution of credit by input service distributor. Clear? Next one. 21. Manner of recovery of credit distributed in excess. Manner of recovery of credit distributed in excess. Distributed in excess. Clear? So in this video, we will be covering these 3 sections, guys. 19, 20 and 21. Clear? 19 has to be read along with section 143. We will be learning that also, what section 143 talks about. And in our next video, we will be learning 49, 49A and 49B. 49, 49A and B talks about utilization of credit, which we will be learning it in our next class, guys. Clear? Sure. So now we will be starting with 19. Come to section number 19 after section 18. Yeah, this part. Goods sent to job worker. Goods sent to job worker. Clear? So I will just explain this concept first, then we will go through the provision. See guys, there is a principle. who is manufacturing some goods, is manufacturing goods. So let us assume the principal is from textile industry, is from textile industry. So is stitching the clothes, shirts, pants, or whatever it is. Okay. And whatever shirt, pant, and all he will stitch, he will send this goods to one job worker. There is one job worker who will do job work. Who is job worker first of all? Job worker is the one who will do job work, who will do some processing, who will do some processing for someone else's goods. He is not manufacturing anything. He is just doing some process on someone else's goods. Okay. Okay. So this principal who is engaged in a textile industry is sending whatever shirt and pant is stitching for button stitching, only for stitching the button. So cloths and all will be stitched by the textile industry principal only. Only for stitching the buttons is sending the materials, that is whatever he is doing, to job worker. So what job worker will do? He will stitch the button for the shirts and also if required for pant. Then he will send it back to the principal. Okay. Or for pant you can consider as zip. Okay. So the job worker is putting the buttons for shirts and zip for the pant, also a button for the pant, and he is giving it back to the principal. Okay, sir. In this case, what is job worker is doing? He is not manufacturing anything. He is just giving a service to the principal. So job worker, whatever service he is giving to the principal, he will charge for it and he will collect the payment. In this section, they are not talking about that. What we are talking is, sir, principal is sending the goods to the job worker to do some job work. Can input tax credit be claimed on this material? Because principal has sent it to the job worker. Can the principal, the goods belongs to whom? Principal. Principal is the one who can claim the credit, not the job worker. Okay. Yes. Can principal claim the input tax credit on this material which is sent to the job worker? Yes. He can claim it. Now, assume principal has also sent some capital goods, some machine, that is button stitching machine. He has also sent it, which is owned by principal. So principal has given materials as well as the capital goods to the job worker. Job worker has to do whatever the principal has asked and he will send back the output to the principal. In that case, for whatever materials, or we call it as inputs and capital goods which is sent to the job worker, can the principal claim the credit? Yes, he can claim the credit. He can claim the credit, but some time limit has been given. So what is it? Let me explain it here. Now, please pay attention. Principal is sending inputs or capital goods to whom? Job worker. Why? To do some job work. So the goods belongs to whom, or the capital goods belongs to whom? Principal. Okay. Now the inputs and capital goods are sent to the job worker. The question is, can ITC be claimed by principal? Yes, it can be claimed. But the job worker has to return back the input and capital goods. Input within 1 year, he has to return it back within 1 year. Or in case of capital goods, you need to return it back within 3 years. I repeat, if the goods or inputs is sent to the job worker for processing to do some work, it has to be returned back by the job worker within 1 year. Sir, what if it doesn't return back within 1 year? Then whenever the goods are sent to the job worker, it is treated as supply. When the goods were sent 1 year before by the principal to job worker. So at the expiry of 1 year, if the goods are still not returned back by the job worker, then it will be treated as the goods are supplied by principal to job worker at the end of 1 year. And assume the job worker is giving back the goods after 1.5 years. In that case, there are two supply. At the expiry of 1 year, there was a supply between principal and job worker. Agree na? Yes. But see, I told you, please pay attention here. Principal has sent the goods to the job worker on 10th June 22. Okay, sir. He has sent the goods to the job worker and he has claimed the credit. Okay. Within 1 year, the goods has to be returned back by the job worker. That is within 10th July 2023, the goods has to be returned back by the job worker. But job worker has not returned back. In that case, 1 year has expired. Now, whatever inputs has been sent by the principal to the job worker is deemed to be supplied on what day? On 10th June. Not on 10th July. It is deemed to be supplied on 10th June because when input was sent to the job worker on 10th June only. So it is deemed to be supplied by principal to the job worker on 10th June. Very interesting. Clear? So whatever ITC the person has already claimed, he need to pay that along with interest. Along with interest from 10th June till the date he pay the tax. Agree? Okay. Same provision is applicable for capital goods, but for the capital goods time given is 3 years. Now principal has sent the capital goods to the job worker. Why? Because job worker will use this capital goods to do his processing for the goods which are sent by the principal. Okay, sir. So in that case, capital goods on whatever capital goods he has sent, can he claim the ITC principal? Yes, he can claim it. When he has sent it only, he can claim it. Now the question is, if it is not returned back within 3 years, then in that case, on what day he has sent the goods, it is on that day itself it is treated as supply. So in that case, whatever ITC has already claimed, he need to pay that along with interest. Along with interest, it is treated as supply. Clear? Later, sir, job worker gave these inputs after 1 year. In that case, again, that also will be treated as supply. Even that also will be treated as supply. Even if it is without consideration, still it will be treated as supply. And invoice will be issued in the name of agent in that case. Invoice has to be issued in the name of agent. So here, job worker is acting as an agent actually. Okay, you have to issue the invoice in his name. Okay, we don't use the word agent, but still, job worker is somewhere similar to agent, guys. Clear? So this is just a provision. Now, we will discuss in detail. Next, one more thing. Sir, now, principal. Okay, one more thing. Sorry, before that. Now, job worker has to return back the inputs within 1 year or capital goods within 1 year. But there is one more option that principal has found a customer who is near to the job worker. So he asked the job worker to deliver the goods to his customer. So who principal told a job worker, just deliver whatever you have stitched now, that is cloths or shirt or whatever, please give it to my customer who is near to you. So in that case, it's fine. Even if the goods are supplied directly from the job worker place within 1 year, or if the capital goods are supplied within 3 years, still it is fine. Still it is fine. Means simple, guys. Within 1 year or for capital goods within 3 years, the goods has to be returned back or it has to be sold. From job worker's place only it can be sold. Clear? Because on that sale, the principal will be liable to pay tax. For principal, it will be an outward supply. Even though it might be supplied from job worker's place, fine, still no problem. Whose outward supply is that? Principals. Principals. But there is some conditions for this. We will see that later. Okay, this is one thing. There is another thing. Now, principal purchased the goods from one supplier. He purchased the goods from supplier, but he didn't take the delivery. He asked it to deliver it to job worker directly. He asked him to deliver it to job worker directly. Can it happen so? Yes. Now, principal has purchased the inputs or capital goods from the supplier, but he has asked it to deliver to the job worker directly. Now the question is, can principal claim the credit of this? Yes. Under section 16.2, one of the condition is the goods has to be actually received by the recipient, but still here the goods are delivered to the job worker on the direction which is given by the principal. In that case, still principal can claim the credit of the goods or capital goods which are received by the job worker. But even in that case, it has to be returned back within 1 year or 3 years. From what date? From the date on which the job worker has received it. Assume the job worker has received this goods, whatever is received, on 15th June 22. So from year, 1 year or 3 year period will be counted. From year, 1 year or 3 year period will be counted, guys. The date on which the goods are received by the job worker. If the goods or capital goods are directly delivered to the job worker, then 1 year or 3 years time period will be counted from the date on which the goods or capital goods are received by the job worker. If it is not returned back within 1 year or 3 years, then on this day it is considered as deemed supply. On 15th June, that is the date on which the goods are delivered to the recipient, on that day, it is deemed to be supply between whom? Principal and job worker. It is deemed to be a supply, and who is liable to pay tax on it? Principal. For principal, it is an outward supply. He is the one who is liable to pay tax. Clear? And if job worker is giving back after 1 year or 3 year, that will be second supply in that case. And that will be the supply from whom? Job worker to principal. And who is liable to pay tax on that? Job worker as a supplier. Clear? Yes, sir. This is what the provisions covered. So let us see in detail what is given in the provisions or sections. Chalo guys. So look here, pay attention. Goods sent to job worker. Section 2 clause 68 defines job work. Job work means any treatment or process undertaken by a person on goods belonging to another registered person. So that another registered person, we call him as principal for explanation's sake. And expression job worker shall be considered accordingly. So whoever does the job work is called job worker. Clear? So what is job worker doing? Only a treatment or process. So is it a supply of goods or services? Supply of service. And it's clearly given in schedule 2. So for that, yes, job worker will be charging the amount to the principal. Here we are not discussing that product. What we are discussing is from principal to job worker, whatever the goods have been sent or capital goods have been sent, can the credit be claimed? That is what we are discussing. The person who undertakes the job of treatment or process for another persons is called job worker. The owner of the goods who engages the job worker is called principal. Input and capital goods can be sent to a job worker and the principal can avail ITC on them. The goods can be supplied directly from the job worker's place. Means principal can supply the goods directly from job worker's place if he has found the customers without bringing them to the premises of the principal. Input should be brought back to the principal, or alternatively it can be sold from the job worker premises on behalf of the principal within 1 year in case of normal goods and within 3 years in case of capital goods. Clear? Provided further that a period of 1 year and 3 years may, on sufficient cause being shown, be extended by the commissioner for a further period not exceeding 1 year and 2 years respectively. So for normal goods, 1 year period is given. This is the normal time. But if a commissioner feels it is necessary to extend the period, he can extend this for another maximum 1 year. Okay, normal time. You should always remember normal time, guys. Okay, if commissioner feels it is necessary, there was a lockdown during COVID time and also goods couldn't be returned back within 1 year. So if he feels that necessary is there, he can extend this 1 year for another 1 year. Whereas for capital goods, he has already given 3 years normal time, but if necessary, it can be extended for another 2 years. So including extension, for normal goods, it would be 2 years, and for capital goods, it would be 5 years, including extension. But whenever you are answering the question, until and unless they specifically ask in the question with respect to extension, don't touch the extension part. Always answer from 1 and 3 years point of view, guys. Clear? If they have specifically asked about the extension in the question, then accordingly answer, including this proviso. Or else don't touch this proviso in your answers. There are questions asked on this topic in the exam. We will do that later. If the goods are not sold or brought back within the stipulated time, the supply between the principal and the job worker is treated as a deemed supply, and tax is payable thereon by whom? By the principal. So if the goods are not returned back within 1 year in case of normal goods, or if it is not returned back by the job worker within 3 years, or if it is not sold within 3 years in case of capital goods, then it will be treated as a deemed supply from principal to job worker, and principal has to pay tax on it. because he is treated as the supplier. Then molds and dies, jigs and fixtures are tools sent out to a job worker for job work need not be brought within 3 years time. So for this purpose, that is for job work purpose, capital goods excludes molds, dies, jigs, fixtures and tools. It need not be returned back within 3 years, guys. Clear? Yes. Next, section 143. Section 143 of CGST Act 2017 states that principal under intimation and subject to such conditions as may be prescribed can send the inputs or capital goods to a job worker without payment of tax. So it is not a supply. Principal is sending the goods only for job work. So he can send the goods to the job worker without paying the tax. Who? Principal. For further process or treatment, and from there subsequently to another job worker. So from one job worker to another job worker also you can send the goods without paying tax, and shall either bring back the such inputs or capital goods after the completion of job work. So if it is for normal goods within 1 year or for capital goods within 3 years of their being sent out, so it has to be brought back within 1 or 3 years, or such inputs, capital goods after completion of job work. You can also supply from the job worker's place only, you can supply to your customer within 1 or 3 years from the place of business of job worker on the payment of tax. And it will be a supply of whom? Principal. It might be supplied through job worker's place, but still it is a supply. It is an outward supply for whom? Principal. Who is liable to pay tax on it? Principal. Okay. On payment of tax within India, or with or without payment of tax for export. For export, there is an option without, means you can export even without paying the tax, because as it is a zero rated supply. So with respect to export and all, we will cover it later, guys, the later part of our classes. So the principal also has an option. He has two options within the time, that is 1 year or 3 years. He has to get back the goods to his place, or else he can also sell it to the customers from job workers place only within that time. But provided, a proviso is there, provided that principal shall not supply the goods from the place of business of a job worker in accordance with the provisions of this clause unless the said principal declares the place of business of the job worker as his additional place of business. Now what they are trying to tell is, if the principal is supplying the goods directly from job worker's place, then principal has to disclose that job worker's place as his additional place of business. Job worker's place, the principal has to disclose it as additional place of business of whom? The principals. Only then he can supply the goods from job worker's place. If not, he cannot. But except in a case, means in the following cases, the principal can supply the goods from job worker's place and he need not disclose the job worker's place as additional place of business. Why? Because, sir, job worker also is registered under GST. So if he is registered under GST, then the principal need not disclose the job worker's place as the additional place of business. Okay. Next, where the principal is engaged in the supply of such goods as may be notified by the commissioner, means if any of the goods which is notified by the commissioner, which is being supplied by the supplier, principal, in that case the principal need not disclose the job worker's place as additional place of business. So in these two cases, the principal need not disclose the job worker's place as additional place of business, but still he can supply the goods from job worker's place directly to the customers within 1 or 3 years. Okay. The responsibility for keeping the proper accounts for the inputs or capital goods shall lie with always the principal. The responsibility of maintaining the records will always be with the principal. Any waste or scrap generated during the job work may be supplied by the job worker directly from his place of business on payment of tax, if such job worker is registered, or by principal if the job worker is not registered. If there is any scrap which we have got, means which the job worker has got while doing the process of job work, he can sell it directly, and on that he is liable to pay tax if he is registered under GST. Or if job worker is not registered under GST, then who is liable to pay tax on the supply of that waste also? Is principal. Principal is the one who is liable to pay tax even on the supply of that waste or scrap. Next, for the purposes of job work, input includes intermediate goods arising from any treatment or process carried out on the inputs by the principal or the job worker. So see, whatever goods has been sent to the job worker, it can be inputs or intermediate goods. For example, my example, textile industry. So already the shirts and pants have been stitched. Only for button and zip stitching or part, the goods have been sent to the job worker. So what goods are sent? Intermediate goods are done, which is already partly work is done on this. Or else, assume straight away, I have outsourced the manufacturing of my product to others. Okay, so I will purchase the input, straight away input is given to the job worker, he will produce something or he will do some process and give it back to me. So what they are trying to tell in this paragraph is, sir, whatever is sent to the job worker, it can be purely the input or it can be intermediate goods, which is already partly produced. So the remaining work will be done by the job worker, something like that. Okay. Next, coming to section 19. Now we are actually getting into section 19. Till now, whatever we understood was the job work and the provisions given in section 143. But now what is covered in input tax credit chapter, that is section 19. Taking ITC in respect of inputs and capital goods sent for job work. Section 19 of CGST Act 2017 states that principals shall, subject to such condition and restrictions as may be prescribed, be allowed input tax credit on inputs sent to a job worker for job work. Although section 16 of CGST Act 2017 specifically states that ITC will be provided only when goods are actually received, but under job work, this condition is exempted. And ITC can be availed even if inputs or capital goods are directly sent to the job worker without being first brought to the place of business of principal. I explained this scenario. Principal has purchased the goods. He asked the supplier directly to deliver it to the job worker. Can principal claim the ITC on that? Yes, he can claim it. He can claim it. Now, taking ITC in respect of inputs and capital goods sent on job work is as follows. Principal shall be entitled to take credit of input tax on inputs even if the inputs are directly sent to the job worker for a job work without being first brought to his place of business. So even if the goods are directly delivered to the job worker place without being brought to the principal's place, still the principal can claim the credit of it. Where the normal goods are sent for the job work are not received back by the principal after completion of job work or are not supplied from the place of business of job worker in accordance with section 143 within 1 year of being sent out, it shall be deemed that such inputs as been supplied by the principal to the job worker on what day? On the date when the said inputs were sent out. So if the normal goods are not received within 1 year of the goods which are sent to the job worker, then it will be treated as supply from principal to job worker on the day on which the goods were sent by the principal to agent. Clear? Okay, sir. Next. Principal shall be entitled to take credit of input tax on capital goods. So the point C and D is talking about capital goods. Yeah. Principal shall be entitled to take credit of input tax on capital goods even if capital goods are directly sent to the job worker for job work without being first brought to his place of business. Okay, even in that case credit can be claimed, but here the time limit applicable is 3 years. Where the capital goods sent for a job work are not received back by the principal within a period of 3 years of being sent out, it shall be deemed that such capital goods had been supplied by the principal to a job worker on the day when the said capital goods were sent out. Normally, capital goods will not be supplied for the customers. Agree? So within 3 years, the principal has to take back that capital goods from the job worker. If it is not taken, then it will be deemed to be supplied from principal to agent. When it was originally sent out. That is before 3 years. Provided that where the capital goods are sent directly to job worker, the period of 3 years shall be counted from the date of receipt of capital goods by the job worker. So if the goods, I purchased the capital goods from the supplier, I asked him to directly deliver it to the job worker. So 3 years will be counted from what date? The date of receipt of capital goods by the job worker. So he has to give it back to me within 3 years. If not, the date on which he has received the goods, on that day itself, it will be treated as supply. For whom? Principal. Same way in case of input also. If the inputs are directly delivered to the job worker, 1 year time will be counted from the date on which the job worker has received the goods. If it is not written back within 1 year, then it will be a supply on the date on which the job worker has received the goods. So please be careful. Let me again elaborate this point. Look here. First, inputs. If inputs are sent from the principal to job worker, from the day it is sent by the job principal, the day on which it was sent by the principal, 1 year will be counted. If it is not written back within 1 year, so on the day on which it was sent out, it will be treated as supply. So 1 year before, it will be treated as supply, on which principal is liable to pay tax. Yeah, same way for capital goods, 3 years limit. Okay. Next, coming to, sir, what if the input is directly delivered to the job worker place by my supplier? In that case, 1 year time limit will be counted from the date on which the job worker has received the goods. So the date on which the job worker has received the goods, from there 1 year time limit will be counted. If the goods are not returned back within 1 year, or if it is not sold within 1 year from the job worker's place, then on the date on which it was received by the job worker, it will be treated as supply. The date on which he has received it will be treated as supply, guys. Clear? Same thing applicable for capital goods, but it is 3 years there. 3 years time is given. Next, E. Nothing contained above shall apply to molds and dies, jigs and fixtures or tools sent out to a job worker for job work. So capital goods does not include molds and dies, jigs and fixtures or tools for the purpose of job work. It need not be returned back within 3 years. It can be kept by job worker only, even after 3 years. Still, it will not be treated as supply. Essentially, it's imperative to note that principal can claim ITC on the inputs and input capital goods and can send this to the job workers for further processing without payment of GST under the cover of prescribed challan. So he has to issue a challan to the job worker. But where these are not either sold by the job worker or returned by the job worker within 1 or 3 years, as the case may be, then the supply between them is considered as deemed supply, that is from principal to job worker, and tax with interest has to be discharged by the principal. Along with interest he has to pay. Why? Because it was a supply 1 year before, or if it is a capital goods 3 years before. So you will end up paying tax on that along with interest. An illustration is given. ABC Limited sends T-shirts to its job worker for fixing the collar in batches, and batch was sent on 14th July 2019. The collars were fixed and T-shirts were sent back to the principal on 31st May 2021. Okay. So goods were sent to the job worker on what day? 14th July 2019. So it has to be returned back within 14th July 2020. But when it was given back? 31st May 2021. So after 1 year. So in that case, is it a supply between principal and agent? Yes. On what day? 14th July. That was when it was originally sent. On that day itself, it will be treated as supply. Clear? Yes, sir. In this case, since the goods were not returned to the principal by the job worker after the completion of work within 1 year of it being sent to the job worker, the supply between the principal and job worker would be deemed supply, and hence the tax would be deemed to be paid along with applicable interest. So the supply is on what date? 14th July 2019. So from here till the date the principal pay the tax, interest also will be counted. Interest also will be added. Okay. Also, in such case, when the goods are returned by the job worker to the principal, that again would be considered as separate supply. Now, Goods are returned back by the job worker to the principal on what day? 31st May. Not within that time. So there is one more supply there. From whom to whom? From job worker to principal. On what day? 31st May. Who is liable to pay tax on it? Job worker. Job worker is liable to pay tax on it. And this supply has taken place on what day? 31st May. So there are two supplies here. One is from principal to agent. When did it take place? 14th July 2019. So from that day till the day he pays the tax, the principal should also pay interest. Okay. Then there is second supply, that is from job worker to principal. On what day? 31st May. Who will pay tax on it? 2021. Who will pay tax on it? Job worker. Job worker will pay tax on it. Is that clear, guys? So this is all about when the goods are sent to the job worker for job work, how to claim ITC or whether there is any supply or not. Clear? Yes. Chalo. There are two questions asked in the exams on this topic. Let us do that. Come to the problems. Yeah. Till 8th question we have already discussed, guys. 8th problem. So now let us go to the 9th one. Just a second. Yeah. Let me read 9th one. Goyal manufacturers, a registered person, instructs its one of the suppliers to send the input directly to Sumit Enterprises, who is a job worker, outside its factory premises for carrying out the certain operations on the goods. So Sumit Enterprises is a job worker who is doing the job work outside his operations. No problem. It can be sent outside also without paying tax. But we should make sure that principal is receiving the goods within 1 year or he should supply from job worker's place within 1 year. Okay. Next. The goods were sent by the supplier on. Okay. So here in this case, Goyal Manufacturers is a principal. Okay. Then Sumit Enterprises is the job worker. So Goyal Manufacturers has asked their supplier to directly deliver the goods to job worker. Can it happen so? Yes, sir. It can happen. The goods were sent by the supplier on 15th July and were received by the job worker on 17th July. So which date matters for us? 17th July. So goods are received by the job worker on 17th July. Now the question is, can Goyal manufacturer claim the credit on these goods which are directly sent to the job worker? Yes, they can claim it. But they should make sure that within 1 year from 17th July, it has to be returned back by the job worker or it has to be sold from the job worker's place. Whether Goyal manufacturers are eligible to take input tax credit on the inputs goods directly received by the job worker from the supplier? Yes, he can claim it. Then discuss what action under GST law is required to be taken by Goyal manufacturers. So it is asked in June 2019 exam for 4 marks, guys. Let us see the solution. As per section 19 of CGST Act 2017, the principal is entitled to take input tax credit of inputs sent for job worker even if the said goods are sent directly to the job worker from the suppliers. He can claim it. Section 19 of CGST Act 2017 further stipulates that where the inputs are sent directly to the job worker but are not received back by the principal within 1 year of the date of receipt of inputs by the job worker, it shall be deemed that such input had been supplied by the principal to the job worker on what day? On the day when the said inputs were received by the job worker. So if the goods are not returned back within 1 year from 17th July 2018, then there is a deemed supply from principal to job worker on what day? On 17th July 2018. That is the date on which the job worker has received the goods. As it is directly delivered from the supplier to job worker, we need to take this date, not the date on which it was sent. As they have not mentioned when the goods are sent back, that is why this provision are explained. They have also asked what are the actions which has to be taken by the Goyal manufacturers. In view of the above mentioned provisions, Goel manufacturers are eligible to take the input tax credit on the input goods directly sent to the job worker from the suppliers. They can claim the credit. When they can claim the credit? When it is received by the job worker 17th July. On that day itself, it is deemed that Goel manufacturers have received it. Provided if they have satisfied other conditions, they can claim the credit. Okay. Next. However, if the inputs are not returned by Sumit Enterprises within 1 year from 17th July 2018, that is the date of receipt of input goods by the job worker, it shall be deemed that, means it has to be returned back within 1 year from 17th July, means at least by 17th July 2019, the input has to be returned back within this date. It shall be deemed that such input had been supplied by Goel manufacturer to Sumit Enterprises. On what day? Deemed supply will be on the date on which he has received the goods. That is 17th July 2018, not 19. And Goel manufacturer shall be liable to pay tax along with the applicable interest on the same. Means interest will be calculated on the tax amount from 17th July till the day he actually pay the tax. Already 1 year is over. At least interest will be counted for 1 year. Plus, still, how much time he will take to pay tax till then? Yeah, easy question. Theory part. Next, 10th one is again on job work. Amit Limited, a registered supplier, is engaged in manufacturing activity. It also gives job work to other units. It purchased raw materials on 5th June 2018 for 2 lakhs plus GST at 12%. It dispatched 50% of the raw materials to the job worker on 10th July 2018. Okay, they are sending, principal is sending the goods to job worker. How much can the company claim as input tax credit in respect of those goods? Now, here Amit Limited is the principal. They are sending the goods to the job worker. How much? Only 50% goods they are sending. Okay. In that case, Amit Limited, how much credit they can claim? They can claim 100% credit. Not only 50%. 50% they are only having it. Remaining 50% they are giving it to job worker for job work. Still, they can claim 100% credit. Okay. Next. On what day the goods are sent, we need to see here, because the principal is sending the goods to the job worker on 10th July 2018. So goods are sent on, here I will take sent on 10th, what is the date? 10th July 2018. 10th July 2018. So within 1 year from this date, the goods has to be returned by the job worker. If not, it will be treated as deemed supply on 10th July from the principal to the job worker. Clear? So 1 year will be counted from where? 1 year will be counted from 10th July year. How much can the company claim as input tax credit in respect of those goods? They can claim full credit on 2 lakhs. 2 lakhs into 12%, which comes to 24,000. They can claim full credit. Then, what is the time limit for receiving the goods after the completion of job work by the job worker? That is within 1 year from the date on which it was sent, because the goods are sent from principal to job worker here. Okay, so 1 year should be counted from the date on which it was sent. What would be your answer in case 50% of the raw material is directly sent to the job worker by the original seller of the goods? Even in that case, the principal can claim the credit, but goods has to be returned back by the job worker within 1 year from the date on which he received the goods. If the goods are directly sent from the supplier to the job worker, then 1 year time limit will be counted from the date on which he received it. Will your answer be different in case if it is a capital good instead of raw material? So instead of if raw material, if it is a capital goods, instead of 1 year, it will be 3 years. Clear? Yes. And whenever in the question they are not talking about any extension, means don't explain that proviso, guys. There is one proviso where extension can be given by the commissioner for input 1 year, for capital goods another 2 years. So in the question, if they are not asking anything with respect to that point, don't explain it. So just take the normal time. That is normal time for normal goods is 1 year and for capital goods is 3 years. Explain that much. Yeah, let us see the solution. As per section 19 of CGST Act 2017, the principal is entitled to take input tax credit of inputs sent for the job work to the job worker. Section 19 of CGST Act 2017 further stipulates that where the inputs are sent to a job worker but are not received back by the principal within a period of 1 year from the date of dispatch. Date of dispatch means date of sent of the inputs. It shall be deemed that such inputs had been supplied by the principal to the job worker on the day when the goods were originally sent out to a job worker. The day on which it was originally sent or dispatched to the job worker, on that day itself, it is treated as supply. In the given case, Amit Limited paid 12% on goods which works out to 24,000. It dispatched 50% of the raw materials on 10th July 2018 to the job worker. As per section 19 of CGST Act 2017, it can claim input tax credit in entirety regardless, that is they can claim full 24,000 credit regardless of the fact that it has wholly or partially sent such goods to a job worker. So they have sent 50% of that to the job worker, but still they can claim 100% credit. The time limit is that the job worker must return the job raw material as such or as processed goods within 1 year from the date of dispatched by Amit Limited. In the case of delay, the raw material so sent to the job worker would be treated as supply from the date when the goods were originally sent out. Amit Limited would be required to pay tax of, they have already claimed 24,000 credit. So they will be liable to pay that tax along with interest at 18%. Along with the interest, see actually here it should not be 24,000, 12,000 because only 50% of the goods are sent. So only that much will be treated as supply. So 50% of the goods, whatever has been sent to the job worker, which is not returned back within 1 year, it will be deemed supply on what date? 10th July 2018. So the amount comes on that will be 12,000, which is attributable to that 50% part. On that, the principal is liable to pay tax along with interest. From when? 10th July. Where the raw material is dispatched directly to the job worker, the time limit of 1 year would be counted from the date of receipt of raw material by the job worker. Thus, in case 50% of the raw material is directly sent to the job worker, the time limit for the return of such raw material as such or as processed goods would be 1 year from the date of receipt of such raw material by the job worker. 1 year will be counted from the date on which the job worker has received it. In case of capital goods, the time limit for the return is 3 years instead of 1 year. If the capital goods are not returned by the job worker within 3 years, then such capital goods would be deemed to have been supplied to the job worker, and therefore Amit Limited would be required to pay tax on such capital goods along with interest if it is not returned back within 3 years by the job worker. Clear, guys? So this is all about the problems on the job work. There are only 2 problems. This problem I have explained in detail because the question requirement was more and it was for 5 marks. Clear? That is why the questions, they had asked 2-3 sub questions here. So that is why in detail explanation has been given, guys. Clear? Yes. Chalo. We'll continue. Get back now. Section 19 is done. Now we will get into next section. Input service distributor. Input service distributor. Sir, what is this concept? Let me explain this first, then we will go through the provisions. See guys, when I am taking input service distributor is coming only with respect to input service. Now I have taken input service. Okay. My corporate office is in Bangalore, Karnataka. Bangalore, Karnataka. Okay. So the corporate office or head office is in Karnataka. I have another 3 branches. Plus 3 more branches are there. That is, let me take our southern states, Tamil Nadu, Telangana and Kerala. I have 3 more branches, that is Tamil Nadu, Telangana and Kerala. Okay, sir. Now, an input service is received, which will be used by all the 4 branches. These input services will be used by all the 4 branches, including Karnataka branch, in their business. But invoice will not be issued for invoice might not be issued for all the 4 branches. Now, invoice. So for assume I have taken a service for 10 lakh, and on this GST was 1 lakh. So invoice is issued for 11 lakh. Invoice is issued for whom? For Karnataka branch. So being Karnataka branch is the head office, the invoice for entire 11 lakh is issued for the Karnataka branch. Now the question is, can they claim the ITC of 1 lakh? Yes, it can be claimed. Who will claim? It depends on who is using this service. So assume some professional service or legal services has been taken. So who is using this service? All the 4 branches. So in that case, who can claim 1 lakh credit? All the 4 branches, guys. Clear? Because they are separately registered under GST. Actually, this is one more point is there. Whenever you have taken separate registration under GST, whatever credit is attributable to one registration, it cannot be utilized against other registration. For example, I have different registration for Karnataka and Tamil Nadu. So whatever input tax I have for Karnataka branch, I can utilize that input tax only to pay the output tax of Karnataka branch. You cannot adjust input tax of Karnataka branch against the output tax of Tamil Nadu branch. No, you cannot do it because you have taken separate registration. So separate registration, the credit for separate registration has to be calculated separately, and it has to be utilized against the output tax of the same registration. You cannot inter-adjust. That is there actually. Okay, but it is nowhere specifically mentioned in the act, but this point is there. Each registered person will be treated separately. So while calculating the credit, calculate separately for each branch or for each registration, adjust it only against the output of tax of the same registration. Don't adjust it against other registrations. Clear? Now, this service which is taken is used by all the 4 branches. Now, the invoice is issued only in the name of Karnataka branch, which is the registered office. In that case, 1 lakh credit who can claim? Who can claim 1 lakh credit? So the invoice is issued by the Bangalore branch of Karnataka. So we call them as input service distributor, guys. Input service distributor. So this Karnataka branch will distribute the credit of 1 lakh for all the branches, that is Tamil Nadu, Telangana and Kerala, based on the services used by them. So we call them as beneficiary units. So Tamil Nadu, Telangana and Karnataka, Kerala branch are using these services now. So we call them as beneficiaries units who are using the services. So this 1 lakh will be apportioned between all the 4 branches, including Karnataka branch, who is called input service distributor. On what basis they will allocate? They will allocate based on the previous year turnover. Previous year turnover. So let us just take the example. So assuming this service, whatever is taken, is used by all the 4 branches. So the turnover of Tamil Nadu branch in the last year, we are distributing the credit, assume for financial year 21-22. Okay. So check the turnover of 2021. What was the turnover of Tamil Nadu branch last year? So 10 lakh. Telangana branch 8 lakh. Kerala branch 5 lakh. And Karnataka branch, let us take 12 lakh. So the turnover of each branch I have given here. Karnataka branch 12 lakh, Tamil Nadu branch 10 lakh, Telangana branch 8 lakh and Kerala branch 5 lakh. So what is the total turnover, guys? What is the total turnover of all the branches put together? It is like 12, 20, 30, 35. So 35 lakhs. So the total turnover of all the beneficiary units is 35 lakh. So now, how to calculate the credit attributable to each branch? So input tax credit attributable to Tamil Nadu branch. How to calculate? What is the total credit? 1 lakh. What is the total turnover? 35 lakh. Into what is the turnover of Tamil Nadu branch? 10 lakh. Okay. So this much will go to Tamil Nadu branch. Same way. Telangana branch. What is the total credit? 1 lakh. What is the total turnover? 35 lakh. What is the turnover of the beneficiary unit? 8 lakh. So this much will go to Telangana branch. Same way for Kerala branch. 1 lakh is the total credit. 35 lakh is the total turnover of all the beneficiary units into 5 lakh. This much will go to Kerala branch. And for Karnataka branch, coming to Karnataka branch, 1 lakh is the total input tax credit divided by total turnover into the turnover of that respective unit. This is all. So you will distribute total 1 lakh credit to whom? And whose responsibility is this? Karnataka branch. We call them as whom? Input service distributor. So they have to take care of all this procedure. How much credit will be distributed to each unit? They have to decide and distribute it. Clear? And the input service distributor should make sure that the total credit, whatever is distributed for all the branches, should not be more than 1 lakh. Because what is the total credit available? 1 lakh. You cannot distribute more than that. So all 4 branches put together, what is the total credit you have distributed? It should not be more than 1 lakh. It should be 1 lakh exactly. You cannot distribute more than what you have. You have received a credit of only 1 lakh, which you will distribute it to all the branches, including you. Okay. So credit will be distributed only for the beneficiary units, guys. That is whoever is using that input service. So assume, for example now, sir, Kerala branch is not using this service. Only this service is used by Tamil Nadu, Karnataka and Telangana branch. In that case, the credit will be distributed only among those 3. So what is the turnover, total turnover in that case? 10 plus 8 plus 12. It will be only 30 lakhs. Because Kerala government, we have to exclude it. Agree? Yes, sir. So in that case, the total turnover will be 30 lakh. How much will go to Karnataka branch? 1 lakh divided by 30 lakh into 12 lakh. How much will go to Tamil Nadu branch? 1 lakh divided by 30 lakh into 10 lakh. And into 8 lakh would be for Telangana branch. Yeah, means it is not necessary that for all the branches it should be distributed. It should be distributed only for the branches which is using that service, which is taken as input service. Is that clear? So the distribution of all this is the responsibility of whom? Input service distributor. And under GST, for input service distributor, always the registration is mandatory. They have to take registration. If you are playing the role of input service distributor, for you registration is mandatory. Clear? Because you have some additional responsibilities, so you cannot skip from registration. You have to take the registration. Clear? Chalo guys. So come back to the provisions now. Let us go through it. Input service distributor. Companies may have their head office at one place and units means branches, at other places which may be registered separately. So they are registered separately. So distinct persons. The head office would be procuring certain services which would be for common utilization of all the units across country. So the head office has taken some services. The invoice is issued in the name of head office, but the services will be used by all the branches, or not only one branch, but few branches. The bill for such expenses would be raised on the head office, but the head office itself would not be providing any outward supply, so as to utilize the credit which gets accumulated on account of such input services. So these services are used not only by head office, but for other branches also. And there are other branches who are registered separately. They will also be providing outward supply. So in that case, this credit has to be distributed to everyone, whoever is using this service. Since the common expenditure is meant for the business of all the units, it is natural that the credit of input services. So here whatever we are talking is only the tax paid on input service. Input or capital goods is not covered here. Yeah, because we will know exactly who is using the goods or capital goods. So they will claim the credit. With respect to input service, there will be a confusion. Who is using it, how much they are using it and all. So how much who is using, we will not be able to tell easily. So in that case, that is why the input tax on input services will be distributed in the ratio of last year turnover. They are not telling it will be distributed in the ratio of usage. It will be difficult to tell the ratio of usage. Agree? How much input service is used by which department, because service is intangible. So it's difficult. If you just know who all are using it, take the turnover of each branch and distribute it in that ratio. That's all. Okay. The input service distributor, that is in short we call it as ISD, mechanism enables proportionate distribution of credit of input services amongst all the consuming units. Consuming units means who are using the services, which are the branches who are using the services. The concept of IST under GST is a legacy carried over from service tax. Previously, this provision were also there under service tax before introduction of GST. Same thing has been brought even under GST. Thus, a company may have a number of units and GST paid by it on input services received can be distributed to the beneficiary units. That is the branches which are using these services on the basis of their previous year turnover. So what is used as a basis to allocate the credit to each branches? Last year turnover of each branch. Okay. The office of the company which distributes the credit is called input service distributor. Normally they will be the head office or corporate office. Section 2 clause 61 defines input service distributor. Input service distributor means an office of the supplier of goods or services or both, which receives tax invoices under section 31. So invoice is issued in their name towards the receipt of input services and issues a prescribed document for the purpose of distributing the credit of central tax, state tax, integrated tax or union territory tax paid on said services to a supplier of taxable goods or services or both, having the same permanent number as that of the said office. Means whoever is registered, branch office obviously will be registered under the same PAN. So the input service distributor will distribute the credit to the branches who are registered under the same PAN and who is using that services. See, especially in case for goods and capital goods, different bill will be issued for each branch. Whatever will be purchased by different branches, the invoice will be issued separately. Agree? But whereas for service, we will not know exactly, okay, how much service is used by 10% service by Tamil Nadu branch, 10% service by Kerala branch. We cannot tell like that. Agree? So accordingly, invoice cannot be issued separately for each branches. So in that case, it will be difficult to issue invoice by giving a breakup. So that is why one invoice will be issued to the head office. That is where the input service distributor plays a major role. So manner of distribution of credit by input service distributor is given in section 20. So what is it? The input service distributor shall distribute the credit of central tax as central tax. That is, he will distribute the credit of CGST as CGST, or it can also be distributed as IGST. Because if the branches are outside the state, then it can be distributed as IGST also. And IGST credit as IGST or CGST. IGST credit can be distributed as IGST or CGST also. Because both of them belongs to central government, they are told, okay, interchangeable is allowed. Only in case of distribution of credit by input service distributor. Clear? Yes, sir. By way of issue of a document containing the amount of input tax credit being distributed in such manner as may be prescribed. So the input service distributor cannot call and tell, hey branch, I have distributed this much credit to you, take it anta. There should be a document which is issued by the input service distributor to the respective branches, that how much credit is apportioned to them. Next, second point. The input service distributor may distribute the credit subject to the following conditions, namely, there are some conditions. The credit can be distributed to the recipients of credit against a document containing such details as may be prescribed. So input service distributor has to give credit along with the document to the respective branches. The amount of credit distributed shall not exceed the amount of credit available for distribution. Means, in my example, total credit available was 1 lakh. So totally for all 4 branches put together, how much credit can be distributed? Only 1 lakh. You cannot distribute more than what you have. Then the credit of tax paid on input services attributable to the recipient of credit shall be distributed only to that recipient. Okay, for example, you cannot distribute the credit of Tamil Nadu to Telangana or Telangana to Kerala, as everything is one on the same. Na, sir, my branches only, my business only. So can I transfer it to other branches? No, you cannot. Whatever is attributable to the respective recipient, distribute only to them, not for others. There is no interchangeable between the branches allowed. Okay, last point. The credit of tax paid on input services attributable to more than one recipient of credit shall be distributed among such recipients to whom the input service is attributable, and such distribution shall be made on pro rata basis of the turnover in the state or turnover in the union territory of such recipient during the relevant period. Okay, turnover of what period should be taken is given in the explanation, we will see. To the aggregate of turnover of all such recipients to whom such input service is attributable. So always the credit should be distributed on the basis of turnover of last year. The option is also given, sir, what if the turnover of last year is not available? Even if for one branch, if the turnover of last year is not available, they have also given the second option. What is it? So the relevant period, your relevant period means for which period the turnover should be taken as a basis. If the recipients of credit have turnover in the state or union territories in the financial year preceding the year during which credit is to be distributed, the said financial year. Means in my example, if all the 4 branches are having the turnover in the last year, then take the turnover of last year as a basis to distribute the credit in the current year. Okay. Next, if some or all the recipients of the credit do not have any turnover in their state or union territories in the financial year preceding the year during which the credit is to be distributed, the last quarter for which details of such turnover of all the recipients are available previous to the month during which credit is to be distributed will be taken. For example, in my example, there are totally 4 branches now. So assume Kerala branch, I started this year. So in that case, they will not have the turnover of last year. Yes. So in that case, we cannot apportion the credit based on last year turnover. So what they told? Okay. So you are distributing the credit in this month. Say take the previous quarter credit. Take the previous quarter turnover as a basis. Okay. This is only as a second option. First option is always take the turnover of last year to distribute the credit in the current year. If by chance for any branch or for all the branch, if the turnover of last year is not available, in that case, take the turnover of the last quarter, that is the recent quarter, to distribute the credit in the current month. Clear? Sir, what if the last quarter itself is also not there? I am in the first month of my business. I am registered in this month. In that case, wait till you complete one quarter, claim the credit in the next quarter. It is like that. They have not covered it directly, but that is what the meaning. Okay. So if you are still in the first quarter of your business, if you are eligible for any input tax credit with respect to input services, you will not get it in the first quarter. Let first quarter be done. In the second quarter, you can claim the credit based on the first quarter turnover. It is like that. You can distribute like that. So let me read this second point again. If some or all of the recipients of the credit do not have any turnover in their state or union territory in the financial year preceding the year during which the credit is to be distributed, that is, in last year turnover is not available for all the branches or even for one branch, the last quarter for which details of such turnover of all the recipients are available. So whichever turnover you are taking, make sure that for that period the turnover is available for all the recipients. Okay. So the last quarter turnover will be taken as a basis to distribute the credit, guys. Next, the expression recipient of credit means the supplier of goods or services or both having the same permanent account number as that of input service distributor. Means who is the recipient of credit? That is in my example, Karnataka, Tamil Nadu, Telangana and Kerala branch. All these people are registered under the same PAN. Only then they are called the recipient of services or credits. Okay, sir. Now, so all this is the responsibility of whom? Input service distributor. Next, manner of recovery of excess credit distributed by input service distributor. Section 21. Now, input service distributor is the one who is entitled to or who is supposed to distribute the credit to each branches. Now assume In my example, the Karnataka branch was supposed to distribute the credits to the all the branches, whoever is receiving the services or using the services with respect to input service. So they are input service distributor. So they were supposed to distribute the credit. So for Tamil Nadu branch, assume they were supposed to distribute 25,000 credit. They were supposed to distribute 25,000 credit, but by mistake they have transferred 28,000. They have distributed how much? 28,000. So how much excess credit has been distributed? 28,000 means 3,000 extra they have transferred. So can they recover it back? Yes. And who is responsible for this? Input service distributor only. If by chance, by mistake, if they have distributed more credit, they are the one who is supposed to recover it. Where the input service distributor distributes the credit in contravention of the provisions contained in section 20, resulting in excess distribution of credit to one or more recipients of credit, the excess credit so distributed shall be recovered from such recipients along with interest. Along with interest. Assume the excess credit was given 6 months before. Now I am recovering it back. So for that 6 months, on that 3,000, interest also will be charged. And the provisions of section 73 or 74, that is the recovery sections, as the case may be, shall mutatis mutandis, means as it is, apply for determination of amount to be recovered. So if excess credit is distributed to any recipient and if he has already utilized it, the input service distributor has to recover it along with the interest, guys. That is what is given in section 21. Clear? So now we have covered all the sections with respect to input tax credit availment, that is from section 16 to 21, guys. There is some more provisions to be discussed in this chapter. This is with respect to utilization of credit. That is with respect to utilization of credit, which is dealt in section 49, 49A, 49B, and also there are various rules to be discussed. And we should also discuss with respect to 3 ledgers: electronic credit ledger, cash ledger, liability ledger, which we would be doing it in our next class, guys. So we'll stop it here. We'll close it for the day here. We'll continue the remaining provisions. We are not yet done with the chapter 3. We will be completing it in the next class. So we'll continue in the next class, guys. Until then, study well, enjoy your studies. Take care, guys. Bye-bye.